AREC, ticker symbol AREC, went from 65% gains to almost wiping out most of it in days. Right now, I am only up 2.61% after being up big. This is the kind of volatility that can scare people out, but I am staying patient. In this video, I am showing you why it crashed, how I am reacting, and what my long-term plan is. And of course, this is not a financial advice. Do your own research or talk to a financial advisor before making trades. So let's do a my position recap quick. I bought AREC stock starting October 3rd, 2025. As you can see over here, I built up my position to 16 shares up here, as you can see, at an average cost of $3.90. Shortly after, I saw a surge. I was up 65%, but now the stock has pulled back hard and I'm sitting at 2.61%. That's a significant drop from the highs, and yes, it's disappointing. But this is exactly why I warned about volatility in small cap speculative plays, right? So what's causing the crash? There are a few reasons I believe that is happening to the stock to crash. One is the pipe dilution. The company recently closed a 33 million pipe at $3.55 share per share, okay, to fund expansion into rare earth extraction. Because the pipe price was below many market prices, this raises concerns about share dilution. Investors often react poorly to that. Number two, rare earth sector volatility and sentiment shift. Okay, AREC is in the rare earth and critical mineral space, which is inherently volatile. News about China restricting exports or microeconomic fears tend to hit this sector hard. Okay, the broader market may also be rotating away from speculative names right now. And number three, after the quick run up, many traders likely locked in gains. That can trigger a cascade of selling as momentum reverses. Okay, I did not do that. I'm a long-term investor, so I'm going to hold it for the long term. So it's a mix of fundamentals, right? Pipe dilution and market psychology, also overbought, profit taking, and sector pressure are all the factors that is making the stock crash. Okay, so here's my my mindset for this. Here's how I'm thinking through this right now. I am not selling this position in reaction to a dip. I am playing this for the long term. I still believe in AREC underlying mission. Converting coal waste into rare earth and critical minerals is part of the secular trend towards domestic supply chains. Okay, I had said before that I had considered adding more shares if it dropped below my cost average, which is the $3.90, and it did on Friday, October 17th. But I wasn't on my in my portfolio to trade, so I did not buy anything around there, and then it came back up to $4. So if it pulls back to that range, the $3.90 or lower, I might add more shares, maybe take it to 30 or 40 shares depending on valuation and risk. If it continues to climb from here, I will just hold and let time work. Okay, volatility is expected in a stock like this. The key is staying disciplined, not letting emotion drive your decisions. Okay, a few things I will keep an eye on for now. any further financial events, they might do more pipes. Okay. Execution, they are hitting their milestone. Are they hitting their milestones in the element extraction and refining workflows? Okay. Market sentiment or micro risk, inflation, interest rate, or risk of trade hit. Okay, trade hit. Speculative names will get slammed. Okay, share dilution and how investors interpret that. I'll update whenever there is a big development here. Okay, so that's the current story with my AREC position from 65% gains to nearly flat. Look at that. This is crazy, right? It all happens in a matter of days. Wow. I'm staying in it because I believe in the long-term thesis and because volatility is part of this game. In the meantime, click on the video above and to watch my last update on AREC if you missed that. And thanks for watching, and I'll see you in the next video.